Good news just continues to roll in for Tesla and for the economy in general, but we have so much to cover. I want to encourage you to stay for the very end. There's just news, and then more news, and then there's even more news. And at the very end, I've got a big surprise for you in terms of who is going to start covering Tesla or trading Tesla on Sunday nights. So we're going to get an early look at what's going to happen tomorrow with Tesla. All right, so let's start here. We got the autonomous future is coming sooner. Says who? Dan Ives. He says he's raising his price target to $515, but his bull case is $650 in 2025. He's raising his target on Tesla, to 515 from 400. He believes the Trump White House, the next 4 years, will be a total game changer for the autonomous and AI story for Tesla and Musk over the coming years. So now that he's at 650, he's getting very close to my number. Our bull case is 650. We estimate that AI and autonomous opportunity is worth at least $1 trillion alone for Tesla. And we fully expect under a Trump White House that key initiatives will now get fast-tracked as the company has encountered over the first few years compared to what they've been going in the earlier administration. He says, we believe Tesla could reach a $2 trillion market cap by the end of 2025 as the company's autonomous vision starts to take shape, along with the very solid Tesla delivery demand we expect from the core China market next year. Importantly, our price target conservatively estimates or assumes no value for Optimus. Nothing in 650 doesn't count Optimus. Sounds like my story. I'm at 600, not counting Robotaxi or Optimus. Did I say 700, not counting Robotaxi or Optimus. He says, and that could be a major upside catalyst for the Tesla story over the coming years. I'm saying it could be a catalyst at the end of next year if they do a reveal. We maintain our outperform rating on Tesla. Then we've got this set of news. How about this one now? FSD 13.2.1 is rolling out for in a limited release for the vehicles, including Cybertruck. Cybertruck's rolling out a limited release. Not clear yet. I haven't been able to see any reporting on whether Hardware 3 is getting the new rollout, 13.2.1, but it is going out right now. And I'll be reporting more on that in the morning. I'm sure that there'll be overnight reporting with regard to people driving it and whatnot. So we'll keep you informed all day tomorrow. Then we've got this from Teslarati. On Saturday, the Tesla North American account on X announced that for the first time, the team fed raw materials through the kiln in the Robstown Lithium refinery down in Corpus Christi. Is the first large-scale refinery for battery-grade lithium in the United States and the first industrial deployment of an acid-free lithium refining route as detailed by Tesla in the original announcement for the project. Really want to hear more about the actual technology on this. Quote, this investment is critical to our mission to accelerate the world's transition to sustainable energy and represents our efforts to aggressively increase the supply of battery-grade lithium hydroxide available in North America, according to the company. Upon reaching volume production, the lithium refinery is expected to produce around 50 gigawatt hours of battery-grade lithium annually. And of course, I'm sure they can just expand on that as necessary. Some also noted that there was a Tesla Cybercab in the background of the picture posted alongside the announcement following the company's official unveiling of the two-seat robotaxi in October. Tesla is currently hiring at the Robstown, Texas facility, and you can find the company's open job listings on the careers page. Tesla broke ground on that lithium refining facility last May, though the company has been making steadily progress on a construction project throughout the year. The site was initially timed to start production in Q1 this coming year, but obviously it beat just a little bit. The news also comes as the U.S. and other North American and European markets aim to decrease reliance on China for the processing of minerals and electric vehicle batteries. While plans for more lithium refiners are underway in the U.S., not just Tesla, but others, and there are a handful of active and planned lithium mining sites, this factory represents an important step toward making domestic production of EV batteries a reality. According to an October report from Reuters, China makes about 2/3 of the world's lithium chemical output, which is used in the EVs, as well as for phones, computers, many other consumer electronics. Then you have another report from Teslarati. As spotted by Not a Tesla app earlier this week, Tesla owners can now greet their vehicles by pressing the voice command button and saying hello or hi, to which the car will respond by saying hello. So this is the beginning of having a conversation with your car. Tesla's vehicles would simply respond by saying command not understood up until now. So this response suggests that the company is actively developing the voice assistant feature, which has so long been requested by me, by the community. The outlet also notes that the update seems to be coming from Tesla's own servers, meaning that users don't have to have the holiday update installed yet to experience this response. Tesla also interprets user speech remotely on its own servers, and the company has previously hinted that the XAI language model, Grok, will eventually run on all company vehicles. Yeah, that's going to happen for sure. I'm 100% positive of that. All right, this is from me, not from anybody else. This is my Optimus progress milestones for 2025. The first milestone would be to achieve human speed of action. So you want to see these things operating at human speed. It's not necessarily for them to be useful in the factory. It's necessary to get the mental image of them working at human speed. And so what you want is, of course, perception is more important even than reality. So we want them working at human speed. Now, catching that ball the other day, that was pretty good. Walking down those slopes the other day, it's beginning to start look like human speed. Number two, you need to have them be able to train from watching somebody do something, from voice commands, from simulations, and of course, from remote teleoperation. You want to be able to learn from any one of those. Will it be able to learn from all four of those before it becomes a product? I don't know, but you need as many as possible. Number three, you want it to achieve human speed of decision making and then taking action. So you notice a lot of times you'll watch them and it's, picking up something and moving it over here and picking up something. And it's like, oh, it thinks about it. Your car does this from time to time, right? And it thinks about it and then, oh, okay, now I do it. No, you want it to be human speed on that decision making and then taking action. We just talked about the car. Number four for me would be you need to add voice. Now, by the way, I think these things are going to happen more or less in the order that I'm doing here. Number five, then once you have the voice, you need the conversational style. You don't want this to be like your Siri situation where you ask it something and it kind of answers and sometimes just throws up a picture, throws up your website. No, you want it to be conversational, like all the robots in the movies. All right, number six, many, many more demonstrations of autonomously meaningful work done autonomously, not with some kind of a teleoperation. Lots of different kinds of meaningful work. Number seven, interaction with humans and with other bots in real world situations. You need to be able to see that. You saw the bots working with humans at that 1010 show, but you need more of it. You need it in the factory. You need it to be natural and ongoing. Number eight, then you need the start of the limited production on the pilot line. We want to see them being made. We want to know that they're making 10 a week or 50 a week or whatever it is. We want reports. We want to be able to see that limited production pilot line is beginning to produce product. And then we need one of those reports where it says, okay, they get all the whole crowd, all the whole team together, and they go, hey, we just made our number 1,000 Optimus. That's something you're going to want to see, and all along we'll be getting like reports, videos, etc., like we have been, but this will be like, okay, now we're at 1,000. We're going, we're still making 100 a week or whatever. Number 10, an announcement of a partnership with some third party for testing. People talk about Pepsi because we already have that kind of relationship, but it could also be, I've talked about In-N-Out, or it could be some other fast food restaurant. Anyway, some place where there could be a partnership to begin to demonstrate the product being used in some place other than in Tesla. And then number 11, a major reveal to end the year sometime I'm thinking it'll be the latter part of the year, where they'll get clear proof of usefulness, maybe a drone fly through the factory showing multiple uses, specs, or maybe if it's a live performance, a live reveal, then you maybe have them out there doing things like you did on 1010, but now there is no remote operator. Specs, you want to know what the specs are. You want to know what the pricing is. And then you want to know something about the production plan. Is it the 100,000 that I'm hoping for in year one and 1 million in year two? Or is it, more conservative than that? Those are the things we're going to want to know. Okay, that is my timeline. Next subject. I'm telling you, there's so much news here. Next is from AJ. He says, look, key observation, significant upside risk to his 600 price target that he just gave the other day. He says Tesla could potentially soar over 60% in 2025. He says, please read the rationale. There's a huge debate right now whether Tesla can sustain its high implied multiple. I estimate, he says, that Tesla currently trades at 112 times earnings. That's pretty high, right? Now it's traded at over 200 times earnings in the past. He says Tesla's average multiple, though, since the Trump win has been about 90 times. He says, number two, if Tesla delivers this multiple by year-end 2025, Tesla could be closing the year 2025 at just over 700, my number. Three, this is based on my earnings modeling as presented previously, no change. He says this would imply a shocking 62% upside from the current level. He says negative on that or cons. Number one, a multiple of 112 is extremely high, even for the best companies. This should give anyone pause, unless your optionality is all about Robotaxi and Optimus. Number two, in a market turndown or downturn, a multiple of greater than 100 is not sustainable. So if we get the macro starting to work in the wrong direction, then it's going to be harder to keep a PE over 100, which I agree with. Pros, he says, the Elon/POTUS, President of the United States, combination inspires investors to take more risks than usual, since it provides a form of de-risking, mostly through providing regulatory overreach and lawfare shield. Number two, general optimism about the U.S. The GDP growth potential is coming, okay? We think it's going to coming, but that has to be offset at least a little bit, he says, and I agree with him, by some wobbles in the economy that might even be caused by Doge. Elon says we might have to have a little pain to get to the good times. Number three, Tesla maintained a 90 times or higher multiple during 3 other periods, almost without disruption. July of 21 to April of 21, 9 months. July of 21 to April of 22, I think it's supposed to be. October of 21 to January of 22, that was 4 months, and June of 23 to January of 24, 7 months. So he says, number four, the current 90 times multiple, greater than 90 times multiple, just started in November. So we're only 1 month in on that. So it could easily go 4, 5, 6, 7, 8 months. Number five, due to the general optimism around FSD, around the Elon/POTUS, and about the U.S. GDP growth, it appears Tesla will carry a substantially higher multiple during and by the end of 2025 than during Biden's final year. Six, this would imply that his price target of 600 is relatively conservative in the U.S. if the U.S. economy performs in line with 2025, no recession, and as long as there's no delays or major things like the new models, et cetera, and the FSD trial. So if everything kind of goes along as expected, there's no major setbacks, then we should be at his 600 or higher. And you could add to that that the risk on continues. So sometimes, even if the economy's going along great, GDP is going up, everybody's optimistic, risk on can still get to a place where it's like, okay, we need to back off for a while. So that's always possible. He says, bottom line, there's a significant upside risk. He calls it an upside risk to his price target on strong and likely continued optimism. All right, now for January, surprises are coming in Tesla earnings. These are my surprises. I'm going to give you 4 surprises that are going to come in January at the earnings report that people are not taking into consideration in the earnings. Number one, there's a Bitcoin profit that might be recognized, and it's around $1 billion. Yes, I know they haven't recognized it in the past. Yes, I know it would take a change in accounting practices. I don't think it takes any federal changes. I think it could be something that Tesla decides to do internally. I'm not 100% positive of that. I did all the research I could possibly think to do, Ask Grok, et cetera, et cetera. It's under consideration. It is something that's being talked about, but we don't know for sure, but it might happen. And that would be $1 billion roughly. Number two, FSD profit recognition due to being almost feature complete. This is almost certainly got to happen because feature complete, 13.2 did that. I don't know if there's any features left. There might be, but I don't think so. I think it's all done. So if it's feature complete, then it would be taking on 100% of the value, that is in the cash. It's already been received. So it's not a cash deal. This is only a recognition of the profits that we've already generated through cash. Number three, a margin increase due to the IRA battery money. We're making a lot of batteries, what do you call it, in Texas at this point, and we might be making some batteries. We don't know. We haven't heard in Reno. Anyway, the overall amount of money that we should be getting from all these battery IRA monies, I think is not understood. And number four, a margin increase because the FSD uptake is probably increasing. The new cars, there's probably a higher percentage taking it because people are testing it. The people that hand over the cars are taking a 10-minute drive. And also each time there's a really good update, then it goes out and Elon lets everybody take a try. So I think the uptake is going to be higher. Now, next year, uptakes are going to be a lot higher because we're going to get approvals in China, et cetera, et cetera. Gary Black says this. Gary's getting more and more bullish by the day. He says, we're obviously thrilled that Tesla is at an all-time high. Tesla remains our fourth largest position. We've even after trimming 1/8 of their position last month, it's still their number one position. He says 3 dynamics, though, to keep in mind as we near year end. Number one, this is why I brought this up. When Tesla's stock price rises above bullish analyst price targets, the bullish analysts tend to raise their price targets so salespeople that work for them can continue to pitch Tesla as the best idea that they have to their clients. For the first time that he can recall, every Wall Street analyst price target is now below Tesla's stock price until just now. So he's right already. The highest Tesla was stifled at 411. But now what's his face? Sorry. Now that we've got one that is much higher than that, it's 600 or officially 450. No, 515. So that becomes the highest on the streets, 515. So that is above where the price is now. So Wall Street's analysts are trading. They're paid on trading commission flow, not on how accurate their stock picks are. It's the season for determining analyst year-end bonuses. Number two, clients expect the trim on the upside-downside drops, either because the price goes up or the valuation goes down. Tesla has tripled since April, while the NDX plus 24%, NDX is plus 24%. 2/3 of that increase has occurred since Trump won. And number three, for tax reasons, clients tend to sell their losers and keep their winners to avoid paying capital gains taxes until the new year. It says for reasons 1 and 3, he expects Tesla to continue to rally into the year end. And based on all the good news today, holy mackerel, well, I'm not even done yet. Listen to this. Sawyer Merritt says, Gene Munster on Tesla's FSD progress, the whole conversation around Tesla. Very few people are actually experiencing how far along they are. Layer on top of that the fact that humans are increasingly worse drivers. 40,000 people lose their lives every year in auto accidents in the US alone. And layer on top of that with GM's Cruise announcement this week that they're backing out from autonomy in terms of ride hail. If it leaves this leaves it wide open for Tesla. That's not fully appreciated in the shares of Tesla, although I think it's been part of why we've seen this increase. This is Randy Kirk, by the way. I'm already exhausted, and we're not even done with the general economy yet. And there's so much to go. I got to hang in there for another minute. Okay, today and tomorrow is probably it for CT bottle openers. If you're ordering more than 3 and you order on Wednesday or Thursday, I'll find a way to get it to you. If you order any number of camouflage, because I have about 20 or 25 camouflage left. I'll get those to you if you order 2 or more. But if you only order 1, tomorrow is going to be it if you want to be sure to get it by Christmas. Now, if you're in California, yeah, you can order till Friday, at least camouflage, because I think I'm definitely will run out of the silver for the one only shipments by tomorrow, actually, maybe even now. I might already be out. Okay. Now you can also gift me on Patreon. And if you happen to do that on Christmas Day or even the day after Christmas, I will not hold that against you. So go ahead, you can do that, even if you're a little late. Barron says this, the Fed is, I should also tell you tomorrow's normal. Brian White, Larry Goldberg at 5-ish and Brian White at 7:45. Okay. The Fed and regular program in the morning. Barron says the Fed is likely to cut despite the data, not because of it. Oh, really? Who says that? Oh, Breen Capital's economic advisor, John Riding, and Conrad de Quadros, in addition to the Chicago Fed's National Financial Conditions Index, showing that the easiest environment since July 2021, they point to a lack of progress in bringing inflation down to the Fed's 2% target, stable labor market conditions with strong hiring intentions among increased business optimism. So why are they dropping the interest rate? On the last score, the most recent Business Roundtable CEO survey found a marked improvement in outlook and stronger expectations for higher and capital spending. The National Federation of Independent Businesses survey, which we talked about a few days ago, also showed the largest jump in small business optimism in its 39-year history. And they note that they're expecting to see, more hiring. Anyway, crypto stocks. That's the next subject. The wacky ETFs are going wild. The Trump trade is already priced in. While the Fed is prepared to ease monetary policy further against such a favorable backdrop, U.S. fiscal policy seems to be highly expansionary. The Treasury racked up a deficit of $624 billion in the first 2 months of the current year, including $367 billion in November alone. On a rolling basis, the U.S. government borrowed $2.1 trillion over the last 12 months. The Nonpartisan Committee for a Responsible Federal Budget pointedly observed this past week. Uncle Sam would probably welcome some rate relief from the Fed. That would be true. U.S. interest rate expenses have risen hockey stick style to the annual rate of over $1.1 trillion in the third quarter, from only $508 billion in the third quarter of 2020, doubling. Perhaps the bond market is finally taking note, which I've been talking about all week, as the yield on the 30-year Treasury jumped more than a quarter percentage point last week to 4.62. That translates into a 4.5 price drop in shares of the 20-year Treasury bond exchange traded fund, which would be equivalent to a nearly 2,000-point plunge in the Dow Jones Industrial Average. Uncle Sam would probably, I doubled that. The bond market's restiveness may be seeping into stocks, it says. The major averages wound up mixed for the week, with the S&P 500 off fractionally from the record that it hit the previous Friday, and the NASDAQ composite up only just a tiny bit. But the S&P 500 saw more declining than advancing stocks for 10 straight sessions, the longest streak of negative breadth since October 12th of 2000. And the Dow fell for the second straight week, losing 1.8% in the past week. A few Scrooges seem to be snoring the bah humbug to the bulls, and yet everybody expects the Fed to cut on Tuesday. So what's going to happen this week? Well, we're going to get on Monday, we're going to get the Empire. We still have more there's still more coming, not just this list of the things that are happening this week. Believe me, you want to stick around. The Empire State Manufacturing Survey is coming in. Last month, it was up 31 point. No, it was at what? Sorry, I'm having trouble reading this. It was at 31.2, and there's something wrong there. I'm not going to be able to tell you that. S&P flat, but that's what's happening on Monday. We'll get that tomorrow morning. S&P Flash U.S. Services PMI was at 56.1. They're thinking that's going to come down just a little bit. So that is, saying a little softening in services. The manufacturing PMI also was 49.7, coming down to 49.6. That's a slight reduction of the manufacturing sector, which is already, of course, very sucky. The U.S. retail sales numbers come in on Tuesday, and last month it was up 0.4%. They're expecting to be up 0.6% this month. The retail sales minus autos last month was up 0.1. They're thinking that'll be up 0.4, suggesting that autos are not doing that well right now, or at least they think not. We'll see what happens there. Industrial production numbers come in then, and they were down 0.3% last month. They think those will be up 0.2%. That would be nice. Capacity utilization was at 77.1, which is not very good. They're thinking that'll sneak up to 77.2. That would be better, but it should really be closer to 80. For a full-on economy, for really significant full-on economy. Home builder confidence index also comes in on Tuesday. Last month it was 46, which was getting better, and they're thinking that's going to go to 47. I'm not 100% sure that's true, even with the new administration coming in, because the 10-year continues to be out of sight and it's keeping mortgage rates up. All right, Wednesday. Housing starts come in at last month it was 1.31 million. They think that'll go up to 1.34. I have no idea. Building permits, I think that'll increase. Again, they may be surprised on this because the construction people, the building people that build homes, got to be looking at that mortgage number and wondering, is this the right thing to do right now? Then, of course, we have the FOMC interest rate decision. And then half an hour later at 2:30 Eastern Time, Fed Chair Powell has his press conference. We will cover that as we always do. Thursday, we have the initial jobless claims as usual. Last week, 242. This week, they're thinking it'll drop down to 229, which is about the average it's been over the last many months. The GDP second revision, they're expecting that to pop up a little bit. The first round, they do it once every quarter, and then they revise it twice. So this is the second revision, the final revision. It was 2.8 last time. They're thinking it'll go up to 2.9 until a year from now when they're going to go, no, it was really 0.5. Anyway, the Philadelphia Fed manufacturing survey comes in on Thursday as well. It was negative 5.5 last month. It was a big surprise, but they're thinking that's going to bounce back this month to a positive 2.4. Existing home sales are going to come in on that morning as well. They were 3.96 last month. They think that'll pop up. I do not feel that way at all. Everything I'm hearing right now is that real estate is soft. So existing home sales, I would not expect to be going up. And it's out of season too. It's not the right season for them to go up. But in general, I'm hearing softness. U.S. leading economic indicators come in then, and nobody pays any attention to those anymore, but we will still report them. And last month it was down 0.4, and it's been down for 3 years, and I think in a row, maybe a couple of months it was up. I'm not sure, maybe out of 36, maybe a couple of 3. But they're thinking it'll be only down 0.1%. So it's getting closer to being in positive territory. On Friday, we get personal income numbers. That was 0.6. This is the PCE. So we got the whole PCE thing coming in on Friday. And they, generally speaking, these should be pretty accurate because these numbers all show up other places. So where last month personal income was up 0.6%, they're still thinking it's going to come in at a strong 0.4%. Personal spending last month was up 0.4%, which is good, suggesting people would be saving some. They're thinking personal spending for November will be up 0.5% with only 0.4% income, so that would reverse that trend. The PCE last month was 0.2. They're thinking that will come in at 0.2 again. The year over year was last month was 2.3, which was pretty acceptable to the Fed. They're thinking that's going to pop up to 2.5, which should not be good for the Fed. But again, I don't think it's going to affect their decision. Core last month was 0.3, and they're thinking core is going to come in at only 0.2, which would be good for the Fed. But the year over year last month was 2.8, and they're thinking it's going to slightly increase to 2.9. Finally, we get the consumer sentiment number. The final number, this is a revision. They're thinking it's going to not be revised at all. It'll be at 74 like it was last time. And that was it's a better number than we've been having in the past. Okay, the last piece of news of the day, Robinhood started trading Tesla, at 8 o'clock Eastern on Sundays. Therefore, we can look right now and see what we're showing for Tesla for tomorrow morning. It is up 5.75 to 400 almost and $42 in the overnight trading right now on Robinhood. Okay, let's take a look at the bonds. The last time I looked, the 10-year was down a little bit. Yeah, 0.8 of a basis point. So 4.391, still very, very strong. Don't like it. The 2-year up actually 0.2 of a basis point at 4.245. And the 1 month at 4.313, which is unchanged at this exact moment. Then we have oops, I hit the wrong thing here. We have the oil is down a tad, down 31 cents. Texas Intermediate still over 70 at almost 71, and Brent at 74 and a quarter. Natural gas up 1.4 at 3 point, I'm sorry, down 1.4% at 3.234, very much in the same little, well, it goes up and down a lot, but it's kind of in this range now, just over $3, almost and a quarter. We've got gold continuing down to 2.668 after taking a run at the all-time high around 27 to about 2007.40 might have been the recent high. Silver is now bouncing back up a little bit, but it's still only at 31. And copper down 0.08 at $4 and roughly 20 cents. Okay. Stock futures, that's not there. Okay. Dollar still going up. So yeah, just, not a huge amount, but definitely trending upward. Now listen to this now. Here's the other news. See, I told you had to stay to the end. The other news is Bitcoin is now at 105,332 all-time high, up $4,400 today. Whoa. So what does that mean? All right. Finally, the equities for tomorrow morning, the equities are Dow is up 55 or 0.12. S&P is up 5.25 or 0.09. And the NASDAQ is up the least, only up 0.06, 1375. All right. Just for fun, we'll go look one more time at Tesla. About to say, oops, there was the chart didn't load. 442, up 577. All right. So, one last time. Tomorrow is a regular day, regular programming in the morning with the after the bell, then Larry Goldberg at roughly 5 o'clock, 4:30, 5 o'clock, Brian White, 7:45. And we have a great lineup this week. We're going to have at least one brand new guest and one returning guest that we've only had on once before. And then Warren Redlich was on this morning. Great show with Warren. We had a pretty substantial argument, a disagreement about, because Warren is so agreeable about everything anyway, and me too, I never hold my ground. Anyway, we had a good discussion about when the Optimus will hit like 1 million a year. I have my theories. He has his theories. I was shocked. He was not as optimistic about Optimus as I was. So there you go. You can never tell. So that card is right here. And with that in mind, and one more reminder that if you're going to buy any of these Cybertruck bottle openers, it's now or never. All right. It's been great talking to you.